as those bullets are coming through. First off the top, what I noticed, sales growth more than expected. $26 billion in the first quarter. The market was looking for something closer to $25 billion. This is already a huge surge. We were looking for more than 240% growth in the top line. They delivered. Their margins coming in higher than expected. Their outlook for the second quarter also higher than expected. Although it's a plus or minus 2%, they see revenue at $28 billion for the second quarter. The street is around $26.8 billion. So that higher than expected. But again, I said plus or minus 2%. Data center revenue, which again is the key metric here when we're talking about these AI chips coming in higher than expected. Data center revenue, $22.6 billion. The market was looking for $21.3 billion. Earnings above expectations, $6.12. Consensus was looking for $5.59. In addition, they have announced a 10-for-1 forward stock split, a stock split that is effective June 7th. A 10-for-1 forward stock split that is effective June 7th. We are seeing shares of Nvidia move higher, and of course, it has been encroaching quadruple-digit stock territory, and so they are going to be bringing their dollar value per share lower in this stock split, a move that honestly doesn't mean a whole lot in the grand scheme of things, but can make a stock more attractive to retail investors, perhaps because it is less expensive to buy on a per share basis. So taking a look at all of this, they also cash dividend raised, although from a low base, but raising 150% to now a full penny. That will be on a post-split adjusted basis. So they are increasing the dividend. I'm going to do my math on that. So just give me a second on that. But it seems like the big reaction here is that sales beating expectations, profit beating expectations, margins beating expectations. The outlook for the next quarter also higher than expected. And so the stock is at 4.5%, which, I mean, you might say is modest for a name like Nvidia. Let's bring in Ivana Delevska, founder and CEO of Spear Invest, and Gil Luria, who's an analyst who covers Nvidia at DA Davidson. Ivana, you're a shareholder of Nvidia. Did the company deliver what it needed to this quarter?
So thanks for hearing me, Anwar. I think the company did deliver with the revenue beat and as well the stock split. I think it's going to be positive, as you mentioned, for retail investors. I think more than that, though, investors were quite cautious going into this earnings season just because a lot of names have been selling off even on good results. So I think that created a favorable setup into earnings. So we will see how the stock trades tomorrow, but I think this is good enough for them to keep going on the run that they've been on. And if you step back, we really like this stock more for the long term, and we see a lot of upside in the estimates in 25 and 26. We think there is going to be real meaningful upside. So we are able to hold it through earnings despite what sometimes is volatility.
And just to correct what I was saying around the dividend, it's a bit complicated because of that split. They're basically boosting the dividend to 10 cents from 4 cents. And I think, Ivana, that also speaks to what maybe the next part of NVIDIA's story is cash flow.
That's right, Amber. So they already have a pretty solid cash flow, but it's going to be a question of where they deploy that cash flow, and does it come back to the shareholders, or can they find attractive enough ways to invest it? We generally, for our companies, prefer that they invest them back in the business and deliver even stronger results. But when you generate so much like Nvidia, right, you do have to consider buybacks as an option as well as the dividend.
Gil, this is a company that grew in the first quarter more than 245%. Says in the next quarter we're going to double. We're going to grow 100%, which I guess is a slowdown, but one that investors don't seem very fussed about. You're one of the more cautious analysts on the street when it comes to Nvidia, not because of this quarter or next quarter, but because of what could happen in the next year or two. How did these numbers stack up relative to your expectations?
Oh, they look great. They look great. I mean, they exceeded pretty high expectations at that. And it means that they're expanding capacity. We've already heard earlier in the quarter from their customers about how much more NVIDIA GPUs they're buying. And that's mostly Microsoft, Amazon, Google, and Meta. They told us they're going to buy a lot more GPUs this year. That should continue from this quarter to next. They've already guided, probably the one after that and the one after that. The question will start about the year after that, 2026. Expectations are really getting out of hand, and they'll go even higher after this result. But that's still 12, 18 months away. For now, these are great results. They're delivering, they're able to execute, and their customers are telling us they'll keep buying more for the rest of the year.
Ivana, how do you respond to that possible risk that this is really just a one-year growth story, 1-2-year growth story, and then everybody else starts making their own chips and eats into NVIDIA's business?
Thanor, I think there is two components to that question. On one hand, the way hyperscalers generate their revenue is by investing in capex, right? So they're going to have to keep investing in order for them to grow. So they're essentially selling these GPUs as a service to their customers. So this is why we're seeing the capex cycle be pretty strong for several years. And we think what investors are assuming for next year, which is only about 10% growth in capex for the hyperscalers, we think that can go meaningfully higher if they intend to grow. Now, on the other hand, it's competition, right? So we all know that a lot of the hyperscalers are introducing their own chips, right? However, will they be able to be as performant as NVIDIA's chip? We're going to be waiting to see that, right? From what we see today, NVIDIA has shortened their product innovation cycle to only 1 year. So now the new chip that they're coming up with for next year, it's going to be more than double the performance of the H100, which was already pretty amazing, and people were having a tough time catching up to that. So it's really going to be all about how well can competitors compare on performance from the competitive landscape.
I wonder, Ivana, if that could create an air pocket in sales, or if you think NVIDIA will effectively manage that, because when you have a product like the Hopper that's going to be replaced by the Blackwell, if you're a customer, wouldn't you just hold off and wait until the next product?
Well, absolutely. There are already customers that are waiting for the next product. So Amazon was in the news being one of those customers where they would actually benefit from higher performance for what they're trying to do. However, we need to keep in mind that there is a lot of other customers that will do just as well with the Hopper, right? So it's not like the Hopper provides bad performance for the money that you spend. So it really all depends on your use case and whether something like the Hopper can be good enough for you or you need something better performing.
It's interesting, we're seeing some of the gains fade in the after hours. The initial reaction was to see the stock move up about 4%. And Gil, we saw a bunch of other stocks like Supermicro, ARM, AMD, increase after hours after NVIDIA's results. I mean, is there an extrapolation here? I mean, even though you're conscious, you are concerned about NVIDIA in the next year with respect to its growth rate, there's no denying that AI definitely seems to be here, and there are areas of the market to look at and invest.
Well, absolutely. And NVIDIA's in the middle of that. Again, they're going to sell a lot of GPUs this year, and there's going to be a tremendous amount of data center build out. We see that in a lot of industrial companies and materials companies. There's going to be a long tail of data center construction. But back to the hyperscalers, their revenue is only growing 10, 20%. Their AI revenue is growing faster than that. They can't keep growing capex by 50.
Oh, I think he froze a little. Did we get him back? We didn't get him back. But the point he was making, Ivana, is interesting, that these companies, these hyperscalers, will hit a limit on how much capex they can continue to spend on this area without yet seeing growth.
Well, they are actually, Amber, if you look at their results, they are actually seeing pretty tremendous growth, right? So they went from close to zero. So Azure is a good example where the company went from close to zero revenues derived from AI to several $1 billion of revenues. And this is basically return on that capex that was invested last year. So if they want to keep growing this few $1 billion of revenue, they need to invest even more next year. That's kind of how the math works. And if you look at basically the math on return on investment, it is actually very profitable for this company. And that's why you're even seeing startups like CoreWeave come to the space, because they're able to just buy these GPUs and rent them out at a pretty attractive rate.
I don't see a mention yet of China, especially in the CFO's commentary letter. This has been, if there is a wrinkle in Nvidia, it's its exposure to China. Investors have been willing to overlook that. How do you think about what China means to Nvidia?
Well, China is a pretty big market, and right now we are assuming that they are going to be shut out of that market for a longer period of time. So we are already assuming that in our estimates as a base case. That's basically the only way to invest here, because there is really no way to get visibility on where China will be going and all the restrictions.
What do you, I mean, I know that mathematically it shouldn't make a difference that they're doing the stock split, but it definitely goes a long way to attracting retail investors. This 10-for-1 stock split, it'll just make it cheaper, right? And in an era where Reddit or Twitter can drive and move a stock, I wonder if Nvidia has a better chance of getting caught up in that flywheel.
Well, it's a pretty high volume stock, Anwar, so I don't think that that's going to really be a big driver, but stocks do trade up a lot when they have this stock split. It's not really a fundamental positive, so over time you're going to see that kind of either given up or replaced by fundamental upside. But initially it is a little bit of a boost from retail, but it's a pretty high volume stock, so it's not going to be as easy to move as something like a GameStop or Reddit or some of the smaller players.
Is this a green light to buy more shares of Nvidia?
Well, I do think investors should look at any pullback as an opportunity to add. The stock does not look expensive on any sort of metric or any sort of valuation metric. So if you look at EV to EBITDA or earnings multiples, it's trading right in the middle of their historical range. So I do think it's a pretty decently priced way to get exposure to AI. And we specifically like it for the risk reward, because we do think the upside may be not as much as we've seen over the past 2 years, but the downside is also pretty limited here, having support around 20 times EV to EBITDA.
We're seeing a bit of a rising tide situation. Supermicro, AMD, Broadcom up. Those advances are not as strong as NVIDIA's, and NVIDIA's is fading a little bit. But is this a rising tide situation? I mean, what's your AI basket? I assume anchored by NVIDIA, but can you buy AMD too?
So we own AMD as well. That is one of our holdings, and then Marvell as well. So those are our top 3 ways to play AI in the hardware space. We like Snowflake on the data infrastructure side. That's another top 5 holding for our ETF. And we disclose all of our holdings on our website. So I think basically hardware, cybersecurity, and data infrastructure are probably the 3 best ways to get exposure to AI. And then there is also tangential plays like materials, like energy generation, that can provide some diversification as well as potential upside.
To your point on Snowflake, that's up about 5.5%, and on a mixed set of results that I already kind of went through, sales beating expectations, profit light, warning about margins for the year and sales for the year, but the second quarter outlook looked good. They're also got this full suite of AI products. You see that? I asked the analyst at RBC, how much is that AI layer to Snowflake? What's your view on how much AI can be to Snowflake?
Well, I think over time, the entire company is basically exposed to AI because what they do is they will store your data and they provide you with tools of how you can use that data and compute power on demand. So essentially, if you're trying to do any type of AI process, you need to have your data somewhere stored, and then you need to be using some sort of tools, whether it's LLMs that you've internally developed, whether it's LLM that somebody like Snowflake can provide, or you want to use them from AWS. It really is irrelevant. At the end of the day, it will all go through some kind of a platform. So that's how Snowflake is positioned here, and that's why we like it. This is not a one-quarter impact. So as you can see in the results, I think some investors earlier this year were expecting them to blow out results and grow at above 30% growth rate. We're still going through this phase of downturn, and companies are just emerging from doing their cloud optimizations. So it's going to be a slow recovery, but I think they're doing the right things. They're introducing the right products, and I like the new CEO. I like how he's bringing an entrepreneurial angle to the story.